Hello everybody, welcome. Hope you had a good day today, because overall the markets did. We're going to get right into it. I'm going to show you what I see on the charts so you can protect your finances to secure your own future. Alright, we're going to start off with the S&P 500. And here we are. Yesterday we left off with this gap. This gap being an unknown. We did have a slight divergence on this little high that we had. Not knowing what we were going to get ourselves into. Were we going to back test? Were we going to go higher? Well, this morning we opened just sideways basically. And like I always say, yes, it has negative divergence, but it can always burn through. And momentum picked up past our support level, major support level. Momentum's picking up, and it was all day. Had a couple dollars sell off at the end, but that is very typical. It's right at a major support level where we closed on our highest day, gap up, open. We made a new high, and then we closed all the way down there. These are major levels to look at, and in my opinion, guys, we weren't going to test them midday. That's why we got rejected. Here you can see totally after hours we are testing an all-time high, 72.42. We are right there at it. In my opinion, we're not going to go through major support levels midday. What the market has been doing is gapping above them. So I definitely expect a gap tomorrow, whether we gap and crap to retest this line or we gap and go for all-time new highs. Which is what I was talking about a little bit earlier. You need all-time highs with everybody to be in there. The more people that are in, the more the market scheme makers can get their hands on, the more money. If we look at the SPY real quick, that's just what we did. We're right here. I think we're even making all-time highs in the SPY, 386.24, 386.29 after hours. Okay, so I totally expect a gap up tomorrow. The SPY kind of looks like it's gonna come and test these levels. 389, 390, be 3890, 3900 in the S&Ps, which is looking totally possible. Divergence has burned through. I mean, we have a technical one since here, but like I said, right here we can keep going on up and burning through it. Switch over to the triple Qs. Got the same thing. Are we making all-time highs in the Qs? Yes, we are. All-time high after hours. Again, expecting a gap up, kind of resistance level at, we'll just say 336. 338 by the end of the day. Or you can come back down and test these levels. These are just good lines to look at. The IWM, Russell 2000. It has been kind of different with going up, but just really different and compared to the others. But here we are. We're losing momentum in this one, but that doesn't mean after hours, like we are making all-time highs, gap up. Kind of expect a gap and crap on the IWM. Hopefully it doesn't bring down those. But I mean, I really don't have anything to look at when it comes. You can't really validate any of these. We'll put that one there for S and Gs. That would give us the same price target of at least above 225. If it hits up there, I would reach for a sell, you guys. Pull the trigger. Because at that point, it'd be overextended. It may even burn through the divergence, but you're going to need a down day eventually. Switch to gold real quick. Oh, did that happen today? Yeah, looks like we had a bad overnight in gold. I'm going to going to reiterate that I've been talking about the dollar rising and gold is just following. If we want to just switch over to a daily real quick, we really haven't hit even a major trend in gold. We're just going down, following this wedge. Our low, our low lows, our low trend line. We could even drop down to 1700, 1650, 1680. Not be a problem. I'm looking more down here, 1500. Silver. I think the short squeeze is over, everybody. We may have some buyers down here at this back test. We've got some good momentum. The 50 crossing the 100, that's always good. Your 20 is coming in to test it, so that'll be a good test for the next day or two. Watch those. A back test of this line, we could take off, we could drop back. All that volume was right there at that short squeeze. If you weren't in at that time, I'd say you missed out. Bitcoin, here we are, still on this nice little ramp up. Not necessarily a divergence. Well, it is. That's why it dropped down. But we can still keep this up. When the 20 crosses the 50, that's bearish. So I would expect it to come down. Chinese New Year's ends around here. So if Bitcoin gets back down to test this trend line, that would be what you need to look at if you want to buy it. If it holds support here and creates off, that would have been a great buy point. If it breaks, you should have been watching it more and expecting it to go down. Watch your divergences. Anything can happen in Bitcoin. It caught the 50 and it rode up. People saw that it, was going up and it created this. Do we get rejected at this high like it looks like we're going to? Coming back for a back test? We just might. Alright, what I want to show you in the VIX, everybody, we are down below our neutral, not neutral, but our support line in the VIX. We get below 22 and we have all the reason we need for new higher highs in the stock market. Fear is leaving the market, so people want to get back into it. They feel safer if they're not scared of their money being in the stock market. Our next support level, 20 and a half. I'd watch that one, watch either a bounce. After we're in all-time new highs, that'd be very likely. UVXY doing the same thing. We don't have any support levels, but our gap was right here. And we're all the way down here. We might even fill the gap since March. I don't know. Don't really follow this one. What we want to do is switch to bonds. I pointed out a daily divergence, daily bullish divergence. Here we are, we even dropped down again from yesterday. You don't necessarily load up when you get your first signal, so you don't do a full size position. Make sure you got good risk management. You get a little bit, you dabble. If it's going your way, you add more. If it doesn't, you're not losing as much as you would have if you gathered a full size position up here when you first saw the divergence take place. One thing I want to point out, in the past, all these different trend lines, most of them are rough, but if we follow them, we'll just say this one is better on the hourly. Let me go here, look. We follow this one down. The trend was supposedly end the morning of the 14th. Well, the bottom of here was the 13th, the morning of the day before. It happened again here, the morning of the 7th. The bottom was the morning of the 6th. The bottom of this trend would have been the morning of the 23rd. And Uh, would have been the end of the 23rd, and they picked it up in the morning. So, I mean, even with this one would have been, we'll just say midday the 13th, and they picked it up midday the 12th. Right now, this is where we're at. This one's looking about the end of the day tomorrow or Monday morning. And here we are, Thursday. So we can either see what the price action does tomorrow. If it picks up, that that might be our buy signal. It has the it definitely has the potential to even come down here, but this is our major trend line. This is a good buy opportunity, at least somewhere close to up to here, guys. Um, so just make sure you keep watching that one. Got your bullish divergence, lower price action, higher momentum. Same thing in the PPO. If you zoom in the PPO right here, these are actually starting to cross. So maybe we gap up tomorrow morning. We're down a penny after hours, so we'll see. After that, we will switch to the yields. Yields are opposite of the bonds. Yields go up, long-term bonds go down. Here we are making higher highs with less momentum, which is likely to reverse. So this could, absolutely keep going up and still not be able to burn through. And then that would be a likely trend reversal. Yields go up or yields go down, your bonds will go up. And they both have the same divergences at the same time. That's just what they do. They work in opposite. All right, switching to the dollar real quick. It's the first time I've looked at the dollar today, and I already know what it's doing. It's been uptrending, and it has been uptrending. Not necessarily negative divergence. We kind of burned through. We burned through today, so it's just upper price. The market, I don't see the market reacting to the dollar even raising until we hit about this 92. I mean, again, the trend says we'll say the 12th at noon. So we got a couple days of making all new highs in the S&P and the Dow and the Russell, and the dollar still rising as well. It's not until we hit these major levels does everybody realize, holy crap, the dollar is all the way up at 92, and then everyone panics and it all goes down all at the same time. VIX goes up. You got to watch all of that play out all at the same time. I'll show you oil real quick. Oil is still staying up here. I've talked to a couple people, and oil stocks, just from what they said, haven't really played out like U.S. oil has. So is this a play of role reversal in the White House and what they're doing, signing all kinds of new things and whatnot? I won't get too deep into that, but just something to look at. I've also heard all-time highs in oils is a sign of a bad economy, a worsening economy. One of those. It's not a good sign when oil prices go up. Theoretically, inflation will always bring it up. Yes, dollar is rising. Oil should be rising as well. Okay. So does everything else. Gas, groceries, your computer, your subscriptions, your rent, anything. Inflation, you gotta love it. But we'll switch over to... Okay, what I want to show you real quick is the sectors. Again, we had all halfway decent day in all of them except raw materials. It's been having a good one. Just came on a back trend. It's just going to continue down there, I see. Got to find it's really at a major support level, so we could even bounce from here. 50 starting to move up. The 100's moving down. It's only doing something but giving it something to look up to. It could bring our market up. Not that alone, but one thing I do want to show you, after the sector performance on the graph, we will show you individual heat map sector performance. Almost forgot what I was saying. Yeah, we all had green except in raw materials, basic materials. Which, I mean, if you look at them, not really. A couple of them had a bad day, but there's a lot of green days in there. Overall, the financial had green just throughout the board. You have to go back and look at the graph on that one. Healthcare, your technology was all green except for your Microsoft, which it had good earnings, I believe. Google, same thing. Facebook was almost neutral. Here in your consumer cyclical, Tesla down. Come on, everyone wants that one to go up, right? This is just good something to keep your eye on. And here we are, since we're testing new time, all-time highs again, since I feel like we're going to gap up tomorrow. We got a fear and greed index. We have been up here for, honestly, right before it dropped. And then we got all the way to about right here, maybe even got farther. And as it's been grinding higher, here we are about neutral. After this gap up tomorrow, it's gonna be up here. So just keep that in mind. One other thing I like to look at on here is the put to call ratio. I believe I showed you that one. I might have skipped over it. Put to call ratio on here is a 0.73. Anything, say, at or above 0.72, I think it's 0.7, somewhere around there, is neutral to bearish. Well, neutral to bullish sentiment, in my opinion, because I've always heard you act opposite of this one. If there's a lot of puts, if there's more puts than calls in the market, if you're almost at 100% puts, the manipulation behind the market won't let all that money just be given away. That's too much money, too easy of an opportunity. Too easy of an opportunity to give in. If you look all the way back, your bottom wasn't until all your puts made a high. And then they dropped down. So all this money, that was easy money to be made. Here we are, bearish to neutral, the same thing. A 0.6, somewhere around that 0.6, 0.7. Can't really tell on here, but we are a greed rating. It said fear when I looked at it 2 minutes ago, but extreme fear. There it goes. Means more puts. Would have called the bottom if you would have read this. Your June 9th calls. That would have called your top before it dropped. Okay, same thing in October, November, before the election. And here we are, about neutral. We're not making a bottom. We keep going up. Look out below. But, alright guys, I am going to make a separate video for any stocks that I have, any individual stocks. I do have quite a few that I want to show to you guys and just put on here, so you guys can see what I'm doing and how I look at things, so you can follow along if you'd like. So just hit the like, subscribe button, let me know, and I will keep up with you. Have a good night.